Hey, good afternoon, ladies and gentlemen, income harvesters or income investors. Welcome back to the channel. Recently, there has been a talk of, you know, companies or even treasuries or even the governments investing in cryptocurrency, especially the Bitcoin, as a treasury or as a holding in their balance sheet. So it's been a topic of debate in the past decade, but in the recent years, it's been more popular that Bitcoin and other cryptocurrencies have been added to the portfolio of large companies and even governments and wealthy individuals and family offices and so on. Okay, so what about that? Like today, we're going to talk about another cryptocurrency-based exchange traded fund, which is known as the BLOX. Today, we're going to talk about this fund, which is pretty unique. Um, and it is having an exposure to not only Bitcoin and Ethereum indirectly through other funds, but also it's able to invest in companies which are part of the ecosystem. If you remember, I did a video back few weeks ago, about Harvest, which had this HBTE, which is the you know Harvest Bitcoin Leaders Enhanced Income ETF. And there was a very good response on that video, and people were excited. They asked questions about that. And Blocks is actually a similar fund on the American side, kind of seems to be a similar concept, but there are differences in the strategy. There are differences in the holdings, minor differences in the holdings and strategy, and of course the way they approach the investing style is also a little different. I'm going to discuss both, but I'm going to discuss more of the blocks in this video. I'm going to briefly touch upon the Harvest HBTE also to give you the idea. So let's get started. So before we go ahead, let me quickly tell you that this video is only for informative purposes and entertainment, not a financial or investment advice. Okay, so with that, let's get started. So the ticker symbol is BLOX, and this is part of the Nicholas Wealth X funds. And the name of the fund is Nicholas Crypto Income ETF. So you see that on top. And I'll just give you a quick summary. This is basically an actively managed fund that provides exposure to the blockchain technology. Okay, it's similar to the other fund we discussed in the past. And the aim is to enhance income and provide portfolio diversification. The fund blends digital asset-related investments and traditional income-generating securities to capture the growth potential emerging technologies while maintaining a focus on the risk-adjusted returns. Pretty interesting. The whole objective is pretty interesting because it gives you a mix of everything, not just the Bitcoin or not just the Ethereum. Recently, there have been a lot of popularity with Ethereum-based ETFs, and also Solana ETFs have been launched. It's picking up really fast, the digital investment space, cryptocurrencies, digital assets, and so on. Okay, so this picture gives you the whole idea, like basically exposure to Bitcoin plus Ether plus crypto in the industry companies plus weekly income. Okay, one point to note that is they don't directly invest in the Bitcoin or Ether. They invest in other funds which have exposure to the cryptocurrency, and they also invest in cryptocurrency companies or who operate in the ecosystem. For example, the Coinbase and a few other companies. So let's take a look at the holdings, and I will quickly go through the strategy of the fund as well. Okay, that's an interesting quote here. Keep the mustache, ditch the fiat. So that's the quote they have for this fund. Okay, it looks interesting. Okay, let's look at the basic information. The fund was started June 2025, pretty recent, like hardly 3 months now. The expense ratio is like 1%, 1.03 to be precise. And NAV is around $23. Like price should be around the same level. Net asset 61 million. Yeah, pretty decent for this fund which is fairly new. I think I will not talk about the yield right now because it's a fairly new fund, but we can look at it when we get to that point. Yeah, it's a pretty new fund, so it's not much of performance data to look at. And you can see the distribution like since July, they have been paying around 15 cents, 15 to 16 cents, around that range. Mostly around 14 to 15 cents. That's the rough range of dividends they are paying every week. Oh, they pay weekly dividends. That's another attractive feature of this fund. So imagine getting paid every week. That's like a paycheck that you're getting weekly. Okay, what are the holdings? That's the main thing we are looking at. So they have these companies, Galaxy Digital, Robinhood, Ride Platforms, Hut, Coinbase, Iron, Taiwan Semiconductor, Nvidia, Mara Holdings, BLOX. They have a mix of different types of companies. One is they have the cryptocurrency exchanges. They have the mining companies like the Hut or the Rides, and they have the broking platforms, trading platforms like the Robinhood and Galaxy Digital. I'm not sure. It is also into a related space. And Nvidia, which is into chips, and similarly Taiwan Semiconductor. Very interesting combination of funds here. Uh, this fund is actually similar to the other fund which I talked about, the Canadian fund, which is HBTE, which is known as the Harvest Bitcoin Leaders Enhanced Income ETF. Now I'm going to quickly compare the holdings of this one and the blocks so that you will get a fair idea. I just put it in a sheet to make it easier. On the left, I have the blocks. On the right side, I have the HBT. So I'll just zoom in and show you the left portion first. So you'll get a fair idea about the holdings. Okay, I'm going to just focus on the blue part of it this side. So here you can see some of them are marked in bold. All these bold companies, like for example, Galaxy Digital, and you also have the Hut, Coinbase. These are the common stocks which are present in both HBTE as well as blocks. Whereas if you look at Robinhood, for example, which is highlighted in blue, this is only present in blocks. You don't see that in the HBTE. This is unique to blocks, which is the US based fund. Uh, and Taiwan Semiconductor Manufacturing come all the way down. This is also unique to this fund. And Nvidia is also unique to this fund. And similarly, all these blue highlighted ones. They have exposure to Bitcoin use from this Fidelity Wise Origin Bitcoin Fund, and they also have another fund, Van Bitcoin ETF. So these two are Bitcoin related funds, and there's an Ethereum fund, and they also have the Circle and Bitmine, which are unique to this fund, whereas the others are pretty common, like Galaxy Digital, Right Platforms, etc. These are all common in both cases. Let me move to the Harvest ETF, the Canadian version of it, because these two funds have similar strategies. So I'm, you know, using the name Canadian version for the HPTE, even though it's a separate fund from the Harvest. The difference I see is they have a smaller list of holdings, so pretty much concentrated tight portfolio, which I like because I like something which is more compact rather than having too many. But in a way, if you have more number of stocks, it's also more diversified. In this case, we have like probably 15 stocks, like maximum. So here we have these common stocks, and Core Scientific is unique to this one. TerraWolf is unique to this fund. iShares Bitcoin Trust. So in this case, they are using the iShares fund, the BlackRock's, Bitcoin ETF fund, and they have Bitdeer Technologies, CleanSpark, and FitFuFu. So the other companies which are in bold is common in both cases. Coinbase, MicroStrategy, Mara Holdings. Obviously, these are very popular. Everybody heard about these names, and you can see that in both cases. And you have crypto miners, crypto trading wallets, treasury, and digital asset services, and the Bitcoin ETF itself. So different types of companies in both cases. We'll go back to the the main page. So that's about the holdings. Uh, I mean, both have their own pros and cons. I like the HBTV because I'm from the Canadian side, so I like that. But blocks is equally good, if not better in some ways. And I'll explain to you as we move ahead. So stay tuned for that. There are some points where blocks is actually scoring an extra point, and I will quickly go to that. Okay, we are going to the prospectus now. I have the prospectus here, open and ready here. I will quickly take you through that, through what they have in the investment strategies. So I just have to zoom it a little bit so you can understand. Okay, so in the investment strategy, they have three different buckets. Like, so one is the equity portfolio where they hold the shares of the companies which are into the business activities of cryptocurrency or anything related to that industry. The second would be the crypto portfolio, which is the cryptocurrencies like Bitcoin or ETF, but not the exact the currency, cryptocurrency itself, but the funds which are operating in that space. ETFs are funds which are operating in that space, exposure to Bitcoin and Ethereum funds. That's the second part. The third part is option overlay. The options could be overlaid on the equities or on the crypto ETF or funds to generate extra amount of income. Now, the main thing that we are concerned about is option overlay. Now, you are thinking right now that I'm going to explain about the strategy and say that it's a covered call and they sell covered calls. That's just half the story. But there's more to it. That's what I was telling you in the previous page. There is more to this strategies that they have. Uh, Okay, so what kind of strategies they can do using options? That's what we need to understand. Like it's not just any covered call or any strategy, but it's more like a focused strategy. They could do synthetic covered calls, like they can gain long exposure to the asset and write calls on the same asset. That is synthetic covered call. Like I'm not going to go into the technical details of it, but it's similar to a traditional covered call. Instead of buying the stock, they buy a very long, deep in the money covered call, and then sorry, deep in the money call for the long term holding, and then they write short term calls to generate that income, which replicates the stock movements, the long in the money call, and the writing of the short term calls. You are familiar with that, writing short term call options. So that's one part of the strategy. The other would be um, credit spreads. They could write as credit spread. So I'll just highlight this and I'll also quickly tell you what it is. So writing a call option at one strike price and buying a call option at another strike price. So we talked about this or discussed about this in one of the videos about SPY I in the previous one, NEOS funds, where the fund writes a call option at certain strike price and then writes another call option, so buys another call option at a higher strike price so that they can get the premium for the first call option and then for the second call option if the market moves up rallies they can use that to get extra upside. So that way they are able to deal with the upside ceiling that covered calls are known for. That way they can capture the extra upside that covered calls miss to capture. So that's the credit spread. I like the credit spread because it's more like a kind of a strategy where a fund can make income even if the markets are going up or down, as long as the markets are moving in the right direction. These strategies should get a good amount of income. Of course, the credit spread can have certain risks, but the funds have the manpower, infrastructure, and the technology to take care of those trades. Okay, so basically they make the difference between the sold call and the purchased call to make the spread or the difference in terms of profit. And they can also do diagonal call spread, which is similar to the credit spread, but on they do it on different expiration dates. And again, this is very technical and very high level stuff. So I'm not going to go into that deep. But here can tell you that the summary of what they say, it says that they sell a call option with nearer expiration date and buy a call option with a later expiration date. So yeah, selling a call which is a shorter expiration date, nearer one, and buying a call longer expiration date. So pretty interesting, yeah. And they can use strategies like cash secured puts, calendar spreads, and so on. They have umpteen number of strategies that they can use. They can even do colors. So they have a mandate to explore different types of strategies, and that is the beauty of this one because it's so dynamic that they can use different types of strategies across different market conditions. So if the markets are pretty flat and very narrow, they might use something like a credit spread, or if it's moving up gradually, they might do a covered call, or if the markets are pretty flat but moving up, they might do something like a cash secured put. And if they are comfortable buying the underlying, they would do a cash secured put, or they may do some calendar call spreads in other conditions. And I'm not an expert in all these areas because I've not done much of these strategies myself. But these are pretty interesting ways in which they make money. And I've read about these strategies, and these are interesting to read and understand for any finance enthusiast. I've read about it, and these strategies definitely work under the right conditions. And it's pretty difficult for a normal person to pull off these strategies. So I would say that it's better to go through the fund route, to give it to the fund manager and let them do their stuff so that you can, sit back and enjoy the returns and focus on your work and your projects and your basic investments, which are, much easier to manage compared to trying to do these things yourself. So, pretty interesting fund, and it gives you the opportunity to do all this without getting your hands dirty and without taking all the risk. Okay, that's the interesting part that I see in this fund. So I will not go too much deep into that. So that's about that the strategies, and so there are different ways of making income. So that makes it more attractive than a typical plain vanilla covered call strategy. And also when the markets are pretty unfavorable for the covered calls, they can do credit spread, they can do other strategies, they can do cash secured puts, so many options available. So that's the beauty of this investment mandate that they have. Okay, I'll quickly go through the fees and other information quickly. So if I look at the expense ratio, it's about 1.03 for block. If I look at HBTE, let's compare the two. I think the fee is not published yet, but we can get an idea from the management fee. Management fee is 0.75%. So that's only a part of the expense ratio. Probably you have to add some trading fee and other fees. So in that case, the fee is going to be a little higher. But let me check if they have the fee in the fact sheet. I think so far the fee information is not published because the fund is fairly new. No, it's not published. Management expense ratio, they have not mentioned it. Okay, so I think once the information is published, it should be somewhere in the range of 1 to 1.3%. I'm guessing that it should be more than 1%, right? Somewhat similar to what BLOX is doing. Because even though it's a simpler strategy, you still need to write calls. You need to dynamically manage the fund. The strategy of HBTE is a little different. So if you're a Canadian, you're looking to invest in this fund, you can look at HBTE. So I'll give you a quick overview of this. This fund actually has a portfolio of top companies that are part of the Bitcoin ecosystem, and they employ the covered call option strategy to generate monthly distributions. Same strategy. They employ a leverage of 25%. That's something which differentiates HBTE from the blocks. 25% leverage actually increases your returns by 25%. So it will increase your returns like 1.25 times. So, but at the same time, if the fund is not performing well, it's going to multiply that by the same leverage factor. So leverage can be a double-edged sword. So as long as you're able to invest in it for long term, you're okay with the risk, then HBTE is a good option. This fund was started back in April 30th, 2025, so not that old, like a couple of months earlier than this fund. So that's about the comparison of the fee and the basic strategy. Uh, Going back to the blocks. Okay, okay. When I look at the distributions, like look back into the distribution, it's too early because the fund is fairly new. But let's assume that they are able to do like a 15 cents per week. So this is like a 15 cents per week, 0.15, and times 52 weeks there, that would be $7.80. I mean, this is just a rough estimate. This is just for, speculation. It's not a correct, it's not a exact estimate, not a recommendation. Okay, so the price of the fund is $23.34. You can see that here on the right side. So 7.8 divided by 23.34, that gives us, okay, 100 times 100 to get the percentage. That's about 33%, like 33.42. Yeah, 33% per annum. If the same amount of dividend is maintained and assuming the price stays more or less constant at this rate. So this is all speculation. Again, the price can change, dividends can change, a lot of things can change, and portfolio composition can change. So it's a fairly good amount of dividend. Like if you're getting like 30%, it's close to like 2.5% a month. Uh, we don't know whether it's going to sustain this amount of dividend payout. You don't know, but it looks like it can easily achieve something like 24% you know yield per year. It can sustain. Uh, 30 plus, I'm not too sure. Wait and see how it performs. And of course, these cryptocurrency funds can provide higher returns, but they also come with a equivalent amount of risk. And there's a lot of uncertainty with these companies because it's a new concept and new business model that these companies are dealing with. So, so just a couple of points I want to say before I, conclude the video. Before investing in these funds, just give it a few months to see how they're performing, how the dividends are coming out. Like look at it for about 6 months and see how it is doing. And if you're happy with the fund performance, if you're happy with the price stability, it's maintained and all that, and they're able to pay out every week on time, and it's the dividends are not reducing, the distributions are steady enough, then you can actually take a much bigger position into these funds. So if you're on the American side, BLOX is a good option. If you're on the Canadian side, HBTE is a good option to look at. Of course, there are other funds in the same space. I hope you like this video, and thanks for watching. Please feel free to share with your friends or family who might be interested. And if you have any questions or comments, please drop them below. Happy investing.